Hey, what's up, good people? How you doing? Welcome to Stock Up with Larry Jones. Like, subscribe, and the notification bell. Welcome to all of you guys that are new. All right, we are in the Fed FOMC meeting, and they are going to be telling us whether Fed Jerome Powell, whether he's going to pause yet again, second pause, whether he's going to raise interest rates, or what's going to be his decision. Okay. So I'm going to shoot this in linear time to give you the best blow by blow of the Fed FOMC meeting and just condense it down to the important stuff. Okay. So that's what I want to do for you guys today. So he will be going on, and I'm going to condense this down to just play the stuff that you need to know. All right. Hey guys, check this event out. Keenan Grace, myself, Stocks with Josh, Stocks Mo, and my man Chris Sane. We are all doing a fundraiser. I hope you got the message. This will sell out. It will sell out soon. It's already half sold out. Make sure you click. This will be the top link below, okay? Make sure you click it. LA, we're coming there. We're raising money for charity, for children with cancer, and we are giving 100% of the proceeds and the costs to this charitable, worthy charity, should I say, okay? So that's what we're going to do. So let me say this before we get started. We got a few minutes. This morning, I always say that trading during the FOMC meeting is dangerous. So I got into one play. I didn't post it in the Discord, and I didn't post it here because it would be reckless. I did this one for me. I bought one contract just to see if what normally happens. Okay, it was a gamble, so I'm not about gambling, but there's a lesson to be learned. So let's take the lesson in this. Okay, so look at this. So I bought a QQQ call option. For those of you that don't know what a call option is, that is when you think the market is going up. I bought it, shortly after opening bell, and it jumped up, right? But just like we thought, this is what happened. It went up 66%. Actually, it went up 70% during the course of the day. And then it fluctuates, okay? So I did a call on the Qs, okay? For those of you that don't know, and this will be in my class, make sure you check the class. You should not be doing options if you don't even know what you're trading, okay? But just look at this. Invesco QQQ is an exchange traded fund, okay? What does it track? It tracks the NASDAQ 100. So a lot of you guys are making mistakes by looking at the Dow and trading it according to the Dow, and that's not the way it works. Okay. All right. So one of these days I'm going to do a momentum trading video in the Discord. Okay. Speaking of the Discord, good people, the Discord is right here. Right. The Discord is going to be second link below. Come and join us. The Stock Squad is all of us. The core four, should I say. Come and join us. Hey, killer plays every day. We're making money there. Most people pay for the entire course in a week. Like they pay the entire one guy made his entire year in his first trade. Okay, so come join us over there. Let's get right into it. Okay, let's hear what the Fed is going to say. Is he going to pause? Is he going to raise? Most believe that he is going to pause, but here's what I believe, and I'm shooting this in real time. I believe that it is 12:58, so 2 minutes here in Chicago before. So 2 minutes before, look at the upper left-hand corner there. Okay, I'm sorry, right there. It is 12:58, as you can see. Let's see, is he going to, there we go. There's a better picture. I guess not. I guess it doesn't show. There it is, 12:59. All right, I wanted to show you guys that it is legit. Okay, so I'm going to let the Fed speak here, and let's see if there's lessons to be learned.
No surprises, no news. A few new words. In a unanimous decision, the Fed retains its 5.25% to 5.5% target range for its benchmark borrowing rate and retains its language about determining the extent of additional policy firming that may be appropriate. The policymakers' assessment of the economy contains some new adjectives, but no new information. Activity expanded at a strong pace in the third quarter instead of solid. Job gains have moderated instead of slowed. Inflation remains elevated. The statement says tighter financial and credit conditions for households and businesses are likely to weigh on economic activity. That adds the word financial to the sentence, and it may be a nod to the idea expressed by many Fed officials that raising market rates are doing some of the Fed's work for it, a reason not to have raised rates today. This is the second meeting in a row that the Fed has held rates unchanged, and although the dot plot suggests one more move by the end of the year, the markets may interpret today's decision as confirming that rates have peaked. That's going to be a key question for Chairman Jay Powell coming up.
So now, just know that this is 10 minutes before the Fed actually speaks. He released his report, and as we could see, right when he released the report, you could see the jump right here, right? And the Dow, S&P, and NASDAQ, they all jumped on this news. Guys, you know, this is just the way it goes every single meeting. Run up in the morning, right? So if you're skilled, you can make money. Run up in the morning and then peak, and then you could sell it off. You could short it right here. So you could either buy stock or do call options up, you know, and then you could do coming down. Now, I'm just going to tell you, it is dangerous, highly, highly, highly dangerous. So that's why I didn't enter into any positions. Don't want to put anybody's money at risk. OK, so now let's just go over a few things as the Fed at the time of recording this will be talking in about 9 minutes. Some of the things that was in the report was, he said, no rate change. OK, no rate change. So we saw that, right? He said that job gains have moderated, but inflations remain elevated. So job gains have moderated, but inflation remains elevated, right? He's iffy on the jobs, right? But I understand what he's trying to do. He's trying to use his voice as a tool to tame the market. He also said financial and credit conditions for households and businesses will may likely weigh on conditions. Okay, so because of the credit and financial hardships that households and businesses are having, he's suggesting that that is doing some of the heavy lifting for the Fed. Hence, he did not have to go up on rates today. Okay, so now let's hear what the Fed says in this long meeting. You guys know how this goes. A lot of got you questions by the media to try to tank the market. And all I'm going to do is just take a snapshot of the high points, and we're going to discuss that all in this one video.
Good afternoon, everyone. Welcome. My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. We understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. We have raised our policy interest rate by 5.25 percentage points and have continued to reduce our securities holdings at a brisk pace. The stance of policy is restrictive, meaning that tight policy is putting downward pressure on economic activity and inflation, and the full effects of our tightening have yet to be felt. Today, we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Given how far we have come, along with the uncertainties and risks we face, the committee is proceeding carefully. We will make decisions about the extent of additional policy firming and how long policy will remain restrictive based on the totality of the incoming data, the evolving outlook, and the balance of risks. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a strong pace and well above earlier expectations. In the third quarter, real GDP is estimated to have risen an outsized annual rate of 4.9%, boosted by a surge in consumer spending. After picking up somewhat over the summer, activity in the housing sector has flattened out and remains well below levels of a year ago, largely reflecting higher mortgage rates. Higher interest rates also appear to be weighing on business fixed investment. The labor market remains tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 266,000 jobs per month, a strong pace that is nevertheless below that seen earlier in the year. The unemployment rate remains low at 3.8%. Strong job creation has been accompanied by an increase in the supply of workers. The labor force participation rate has moved up since late last year, particularly for individuals aged 25 to 54 years, and immigration has rebounded to pre-pandemic levels. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. Although the jobs-to-workers gap has narrowed, labor demand still exceeds the supply of available workers. Inflation remains well above our longer-run goal of 2%. Total PCE prices rose 3.4% over the 12 months ending in September. Excluding the volatile food and energy categories, core PCE prices rose 3.7%. Inflation has moderated since the middle of last year, and readings over the summer were quite favorable. But a few months of good data are only the beginning of what it will take to build confidence that inflation is moving down sustainably toward our goal. The process of getting inflation sustainably down to 2% has a long way to go. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. As I noted earlier, since early last year, we have raised our policy rate by 5.25 percentage points, and we have decreased our securities holdings by more than $1 trillion. Our restrictive stance of monetary policy is putting downward pressure on economic activity and inflation. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our securities holdings. We are committed to achieving a stance of monetary policy that is sufficiently restrictive to bring inflation sustainably down to 2% over time, and to keeping policy restrictive until we are confident that inflation is on a path to that objective. We are attentive to recent data showing the resilience of economic growth and demand for labor. Evidence of growth persistently above potential, or that tightness in the labor market is no longer easing, could put further progress on inflation at risk and could warrant further tightening of monetary policy. Financial conditions have tightened significantly in recent months, driven by higher, longer-term bond yields, among other factors. Because persistent changes in financial conditions can have implications for the path of monetary policy, we monitor financial developments closely. In light of the uncertainties and risks and how far we have come, the committee is proceeding carefully. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook, and for economic activity and inflation, as well as the balance of risks. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below potential growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
So as you could see, the market really liked what the Fed said. The Fed literally just got through speaking. The market reacted positively. The one share of QQQ I had took off and went back up, actually back up to where it was this morning. Everything he said was a positive, all right? And again, I'm just going to get this up as soon as possible. Of course, no rate change. He said that jobs have moderated, okay? He said he's committed to his 2% target, which that's going to be very difficult to obtain if you ask me, all right? And then he said that, of course, tightening credit conditions, household credit, and business, a lack of credit to businesses will actually, in a way, help him, or should I say, help the Fed combat inflation. So now, at the time of making this right now, they are doing the Q&A, the Dog and Pony Show. I just wanted to get this up to you as soon as possible so you can hear what he said. Now, of course, by the time they get through with the Dog and Pony Show, I expect that this will do an about face and come back down, because generally, usually, they ask a gotcha question. Now, if they don't ask a gotcha question, then you're okay, all right? So I'm looking at all of my plays. Everything is good, nothing tanked, and we're just going to take it from there, all right, good people? So if you really want to learn how to make money in an environment like this, make sure you check out Stock Up You. Stock Up You on this video will be the third link below in the description, where we will help you with technical analysis, charting, options, understanding the basics and fundamentals about the stock market, and even dividend investing. All right, we're going to leave it right there. I'm going to get this up in a timely fashion. I hope to have this up way before they get through with the Dog and Pony Show of asking the questions. Okay, make sure you subscribe and stay put, and make sure your bell is selected on all so you can get all of the latest updates as we break it down so we can make money. Peace.